RS Jalan, the Managing Director, now live with us on the channel. Good morning. We'll talk about the fine print of the earnings as well. But first up, the construct, what the market is looking like for you at the moment, given the global inflationary trend. What happened to the demand and supply situation? How is that also now trending beyond the first quarter for which you have declared the numbers?
Yeah, good morning. Like you rightly said, definitely the global economic situation is becoming a little difficult. But fortunately for soda ash, the chemical which we produce, we don't see any impact, primarily because of the two reasons. One, even if the demand goes down by 2-3%, still the overall, there's no new capacity which has come in the last 2 years. And second, the demand in the solar energy and the lithium battery globally, where the soda ash consumption is required, has also significantly gone up. So if you look at across the globe, be it China, be it US, or be it Europe, everywhere there is a kind of a demand shortage or the supply shortage is there at this point of time. And more particularly in India, if you look at, in India, almost around 23% used to be the imported product used to come to India, which has come down to around 15%. So there is around 8% of the supplies which has come down in India. And which has been primarily been given a two advantage. One, the overall soda ash supply from the India, which has gone up in last 2 years, has been quite well absorbed, as well as the price has also firmed up. So our belief is that going forward next, at least up to 24, we don't see any demand going down or the prices going down from here. The margins are going to be well protected on this level.
You're saying prices will remain firm. Are you telling your shareholders, analysts, that this is the kind of margins to expect for the rest of the financial year?
Yes.
Okay. So these are the margins that are going to stay. What about the demerger? The demerger that has been announced. There was a story that ET now had broken. Any update on that and by when it's going to be closed?
Yeah, it is going as per the schedule. On 18th, NCLT has given a date for calling the shareholders meeting as well as the unsecured creditors on 18th of August. And once that gets approved, after that, I think by next third quarter, it will get implemented as per the schedule.
If you could just give us a little bit more detail, Mr. Jalan, just wanted to understand what are the price hikes that have been undertaken so far in the first quarter, if you could quantify, and by when will the benefits flow in the coming quarters?
See, in terms of the price hike of soda ash, which has gone up by approximately around 13% in last quarter, means quarter one. And the some benefit has already accrued in this quarter, and some benefit will be coming into the coming quarter, which is Q2. And like I said, we remain firm on the prices going forward also.
It's been seen that margins of the textile business are under pressure YOY, QOQ. Is this mostly because of volatility in the raw material prices?
Yes, like you know, particularly in the textile segment, this commodity is basically is a commodity cycle is always there. The last 1.5 years has been quite well for the textile industry, and but definitely there is a slowdown in the textile industry, and this will definitely have an impact, which as you have already seen in the Q1, and probably this will further have some impact on the margin going forward. However, in our case, if you look at, still the margin in the Q1 was around 23% EBITDA margin, and probably maybe 2-3% down from here, you can see in the next quarter. However, we also believe this is going to be short-lived because the cotton prices is also going down, and hopefully the new crop, which looks to be good, probably which will start coming in from October, November onwards. So probably again the margin should be, go up from there.
On the textile division side, what is the inventory level? How are you sitting on it? And because of such high volatility in prices, what is happening to the overall inventory?
See, overall, if you look at in the textile, fortunately, we don't carry any inventory of the finished goods, major inventory, I would call it. Normally, around 15-20 days of the inventory we keep, and that is where we are. Because strategically, we have in last 2-3 years, we have moved from a commodity space to the value-added segment, and that is helping us to kind of go to the regular customer. There is a regular demand in that area. Therefore, there is no inventory. In terms of the cotton, yes, we have a cotton up to October, which we normally cover every year. But fortunately for us, the price on which we have covered this cotton is also even lower than the what price currently the cotton prices are. So we are well protected on the cotton as well as on the yarn inventory or the pricing.
Final question, Mr. Jalan, before we let you go. On your interest costs, considering they've reduced from 30 crores all the way to 12 crores, are you now in a comfortable position? Do you expect further reduction coming in?
See, on one side, as you know, that the interest rates are going up, but fortunately for us, because of the disinvestment we made for the home textile, as well as the healthy margin or the cash profit, we frankly believe that by the year end of 2023, probably our interest cost will be will be almost like a negligible, and maybe the debt also we will be a zero debt company.
To hear that, Mr. Jalan. Thank you so much for taking the time out and speaking with us today.